Hello everyone, in this video we're going to be going over a trade discussion that is going to be on ticker symbol GLD. That is the Spider Gold Trust ETF for physical gold. There's been a lot of discussion recently and a lot of hype surrounding gold, not just from the institutional side of things or investors looking to hedge their asset classes, but also in the retail space as people begin to pile into calls, thinking that there's going to be a gold squeeze. So that is what we're going to be reviewing today. First, let's just go over the scan. I mean, with our standard scan here, if you just price, option volume, no event, and just sorting through the implied volatility versus forecast, the Spider Gold ETF is third out of all the names on the scan, just behind TLT, which is a bond ETF, and GameStop. So that is some great signs. Another thing that we can see down here, guys, is we are seeing a massive run up in volatility recently in GLD, which is coinciding with a massive run up in price because a large portion of this rally that we're seeing with gold has been driven by the fear of banking crises and things of that nature. Now, quick look over the numbers before we really dive into, why this could be here and some risk factors for positioning, things like that, is digging through this, we can see that we have a non-event IV30 percentile of 96. We're in the top 5% of its current implied volatility versus what it usually is at. Skew percentile in the top 10% to the call side, meaning that we usually don't see call skew like this. It's extremely rare, and that is signified here. So we actually went from put skew to steep call skew over the past couple of weeks. Now, looking at how we can get paid here and the risk factors and things of that nature, I mentioned the point about retail, and I think it's a really good point to touch up on. If we look at Wall Street Bet sentiment over this past month, we have seen massive discussions, like the increase in discussion and volume has risen drastically on GLD. This coincides also with news trends, more and more articles, most of them being positive. I think that this might be a reason why we're seeing a bit up in skew, why we're seeing a bit up in volatility, because we are just seeing more involvement, more speculation, people willing to pay at higher premiums, whether that's people looking to hedge, whether that's speculators, whether that's retail that is not price sensitive. There's a ton of coinciding factors. So, with that being said, structuring out the trade, right? There's really two things you could do here. I'm going to touch up on the first one just a little bit, but I'm not really going to go into details here. This is definitely more for experienced traders, and that is a risk reversal, just selling one standard deviation wide on the call side, buying a one standard deviation put. This is just your standard, risk reward P&L graph here. What we're going to see, obviously, is infinite upside risk, and then obviously your downside, you can make as much as whatever. This is really more of a skew type play. If you think that, this risk is unwarranted, right? If you think that, the skew is just, it's completely out of control, top 10 percentile call skew, and you think that, this hype that's being driven mostly by retail and people that could be afraid of what's going on in markets is probably not going to be accurate for the next month. So there's that. Second one's a straddle with our forecast volatility put into place here, and this is probably where most people will find more success, and that has break evens here at around 191 bucks to the upside and about 176 bucks to the downside. With the forecast volatility updated, we should expect P&Ls of around 270 bucks, assuming the stock didn't move per bet per 747 bucks. Obviously, it's after hours that, so this could fluctuate a million times between now and the open, but I thought that was warranted as well. Now, one last thing that I really thought was interesting is the volatility surface and looking at the skew structure on GLD, right? And looking at GLD on the close of Friday, and then looking at on the 30 DT options, and then looking at GLD again on the 30 DT options, but at the beginning of the month. This is absolutely insane what we're seeing, the complete flip almost in the skews. We've seen now massive call skew. We're talking about, levels, to, 20% versus 13%, the Delta 25s. Absolutely ridiculous stuff. So, guys, I'm going to cut this one a bit short because at the end of the day, really what this is about is, it's a trade topic. Obviously, do additional research if you guys think that this might be something. Gold is like most commodities; it's very tricky to navigate sometimes, and I'll leave it there. So, if you guys have any names that you want us to take a look at, feel free to comment down below. Also, if you guys have any questions, feel free to reach out via, an email or a Discord message or a comment below, and I'll see you guys in the next one. Peace.